We turn now to Bloomberg's international economics and policy correspondent, Michael McKee. So Mike, there's some theater, I think it's fair to say, involved in these things. But what's the substance that you took away from it?
There isn't a whole lot of substance to this hearing. Jay Powell stuck with what he has said before, that the economy is getting better. We're at risk from the Delta variant. It has slowed things down. Inflation is up because of supply chain problems, and eventually that should abate. He was asked when eventually is, and he said, I can't really give you a time frame because of what's been going on in the economy. Most of the rest of the hearing, as you mentioned, was a back and forth between Democrats and Republicans using sort of Secretary Yellen as a ping pong ball, criticizing the debt limit, the fact that Republicans refuse to raise it and Democrats are pushing a big spending bill, and both sides don't like what the other is doing. So we didn't get a whole lot of information out of that, although at the very end, one of the things, of course, that's been proposed is that the U.S. mint $1 trillion coin and stick it in the Treasury's account. Right. Janet Yellen said, "No, we're not. We're not going to do that."
No, exactly. And there was a little bit of a lighthearted response to that. At the same time, I wonder if it does go to a substantive point that was made in response to a question from Congressman Caston, where he said, "Janet Yellen, would you repeal the debt ceiling, period, flat out?" And she said, "Yes, if we're up to me, I'd repeal it." I'm not sure I'd heard her say that before.
I don't know if she's directly said that before, but an awful lot of people and members of Congress have said that as well. It has become, over the last couple of decades, a political cudgel which both sides use to beat each other up that serves no actual purpose other than to gum up the works and raise threats on Wall Street. One other thing that was a big subject today was the administration's proposal to have the IRS report tax flows into and out of accounts. The administration had proposed $600 limit on accounts so that people couldn't open multiple accounts, and Republicans and even some Democrats, we heard William Timmons at the end there say, look, we're getting a lot of complaints from people, our constituents, who worry that this is going to give the IRS too much information and they can go after us. And the IRS has somehow leaked tax information in the last year. And so she took a real beating on that one from almost both sides of the aisle. I understand Democrats are talking about raising that limit from $600, but that one is not popular up on Capitol Hill.
Well, exactly. And part of the difficulty she was having was it's sort of changing. And they said, well, in what respects is it changing? And it wasn't quite that precise. But you pointed out that our colleague Laura Davison 2 days ago said they're thinking about raising it to $10,000, which gets more to sort of the claim that they're making that there are some very wealthy people who are getting away with not paying the taxes that they owe.
Yeah, and Yellen's point was that this would be flows information rather than individual taxpayer transactions, but it's still not going over very well up on the Hill. It's part of the reconciliation bill, so it may go through, but you could see some efforts perhaps to strip that going forward, given the vehemence of the reaction of members of Congress.
Yeah, by the way, it didn't help that Political report that came out with really confidential information from the IRS about some wealthy people and their taxes. Yeah. And particularly Republicans are saying, wait a second, you can't trust the IRS.
Yeah, I mean, we don't know, as Janet Yellen said, we don't know how that information got out, but the Republicans are basically saying it had to have been leaked by the IRS.
Okay, thank you so much to our colleague Michael McKee. Now we want to turn to Abigail Doolittle because she is going to give us a sense of what the markets have been doing while we've been hearing from Capitol Hill. So what are the markets doing, Abigail?
You know, it's a very interesting day, David, because we now have markets down pretty sharply. In fact, the Dow is down more than 1%. The S&P 500 down close to 1%, the worst day since Tuesday. And then, of course, was that sell-off day. But earlier, we had very solid gains. So a real turnaround. And also not making sense is the fact that the yield narrative, it's not, quote unquote, working today because yields are actually about flat right now. Earlier, when they had been higher, tech had been up. Typically, as you know, when yields go up, that pressures tech. That hadn't been the case, weighing on banks. So really an off-kilter day. Volatility now rising as well. It could have to do, David, less with that testimony, although you can't not say that there could have been something going on since stocks really did get choppy and then decline during that testimony, especially the end. But it is, of course, the end of the month, and we're looking at the first down month in quite some time. And it is the end of the quarter. And we're looking at the first mixed quarter in 8 quarters this September quarter, this Q3 here, with the Russell 2000 down for the first time since March of 2020. That's also true for the Dow. This as yields go higher. Now, the Nasdaq's actually higher. Again, that doesn't entirely fit with that picture of when yields go up, it should push tech down. I will point out, David, that the Russell 2000, typically a leading index. So the fact that you have that index down in a big way, down about 3% on the quarter, that could be a sign that this fall, that this autumn of 2021 could continue to be a bit volatile for stocks.
Well, you talk about volatile. We've had now at least 2 weeks in a row that's been sort of sharply down early on in the week. Then the equities came back, and then they sort of wandered around for the rest of the week. And we did have the move up, as you pointed out, in the 10-year. It's come down a little bit from where it was. But is the market basically looking for direction?
The market is looking for direction, and I would say even though the rate start narrative isn't working today, it's probably going to come from rates and folks trying to figure out whether we're looking at healthy reflation with the 10-year yield around 150, or at some point we'll be looking at something that's not transitory inflation. The other day we were talking about how we certainly have inflation in commodities rising in a big way, not so much today, but overall. Will that go into rates if the 10-year yield goes up to, say, 175 or even 2%? That's certainly a cause of concern for investors. Plus, David, you also had Bed Bath & Beyond today. They slashed guidance as folks were not shopping, having to do with Delta, supply chain issues weighing on Kohl's. So fundamental causes and the earnings season coming up. Some strategists saying it could be a difficult earnings season as well.
Okay, thank you very much to Abigail Doolittle for that report on the markets. I want to correct myself now. I said earlier that there was a political report that came out on IRS. It was actually ProPublica who published that. Thank you for the clarification. The hearings with Chair Powell and Secretary Yellen are far from the only thing going on up on Capitol Hill today. To take us through the rest, we welcome now Bloomberg Washington correspondent Anne-Marie Hordern. So Anne-Marie, give us a sense of what's happening. We've both got the issue about the continuing resolution to keep the government open as well as infrastructure.
Yeah, that's right. So senators are voting now on a stopgap funding measure, David, as you say, to avoid a government shutdown, which would take place just after midnight. So Friday morning, it'll go to the House as long as it passes. And it's really set to. This was a bipartisan approval of this, and then the president's desk for signature. What's a little bit more interesting and really where the drama is based in the House off this infrastructure vote. Speaker Pelosi sounding very optimistic, but then when you heard from Representative Hoyer, when he was asked, are you confident that you have the votes for this bipartisan infrastructure agreement, he simply said nope. So it looks like they don't have the votes yet from the progressives. This is likely going to potentially fail, but doesn't mean it's dead in the water. It just means that there needs to be a lot more negotiation because progressives just want more movement on reconciliation before they agree to bipartisan infrastructure.
But is there any doubt in our mind that Nancy Pelosi will not bring this forward unless she knows she has the votes? She knows she has the votes?
It's a good question. She could, and she has the power to unilaterally just pull this vote. Or potentially she wants to bring it to a floor, see it fail, to maybe ignite some of the moderates in her party, especially when you look at what's going on in the Senate, like the Kyrsten Sinema of Arizona or Joe Manchin of West Virginia, to show that part of her party, her caucus, the progressives, are serious about not voting for the roads, the bridges, the broadband until they get that expanded soft infrastructure package. Another development here, David, is coming from a political report that Senator Manchin and Senator Chuck Schumer, a memo with both their signatures on about what Senator Manchin wanted. One of them is a top line figure of $1.5 trillion. Another is that the Federal Reserve would stop quantitative easing. And then finally, that reconciliation would not even be debated until October 1st. You could kind of see a little bit more of the mindset of where some of those moderates like Senator Manchin is coming from.
Yeah, we got one of those things, right? It's not going to be debated before October 1st, right? That's tomorrow. But at the same time, that memo, which I thought was fascinating, it was actually dated, as I understand, July 28. Why are we hearing about it now?
Yeah, it looks like it's just being leaked now. Schumer's people are saying that he was not signing up for that, but just an agreement that they had that conversation and he understood where Manchin was coming from. And potentially Manchin could be moved in this debate. But yeah, it was just leaked today. But this was obviously, you could see that these negotiations between Democrats have been going on not just weeks, but really months.
Well, Anne-Marie, I think I have some bad news for you. You've got a long day ahead of you still.
Long weeks.
Long weeks, fair enough. Well said, well said. Thank you so much to Anne-Marie Hordern reporting from Capitol Hill. Coming up here, we are going to have more of Balance of Power, and we are on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. House Speaker Nancy Pelosi is pushing ahead with a vote on a bipartisan infrastructure bill. That despite threats from progressive Democrats to sink the legislation without assurances the Senate will pass a more expansive tax and spending package as well.
We are proceeding in a very positive way to bring up the bill of the BIF, to do so in a way that can win. And so far, so good for today. It's going in a positive direction.
Speaker Pelosi said she is confident that the bigger spending package, which encompasses much of President Biden's economic agenda, will ultimately be enacted despite hitches in negotiations with the Senate over the size and scope of the measure. About 9 months after the arrival of COVID-19 shots, there are still dozens of countries with less than 10% of the population is vaccinated. Earlier this year, the World Health Organization called for an urgent push to hit that target by the end of September, but more than 55 countries remain short of the goal. According to the Bloomberg vaccine tracker, there are large parts of sub-Saharan Africa where less than 1% of the population has been vaccinated. Among countries with populations of more than 1 million, Portugal has the highest vaccination rate at 84%. Greece's prime minister says he is, quote, unapologetic about defending his nation's borders in the face of uncontrolled migration attempts, but he insists his country is doing so in a manner that respects human rights. Greece has faced allegations that its Coast Guard carries out so-called pushbacks, turning away people arriving on Greek territory without allowing them to apply for asylum. Greek officials have repeatedly denied those accusations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you, Mark. As Mark just alluded to, we are watching power politics playing out at the highest level right now up on Capitol Hill. And it's not just Republicans against Democrats, as the Democratic caucus appears to be divided between progressives and moderates. We welcome now an experienced Democratic strategist. He's Kevin Walling, Vice President of HG Creative. Kevin, thank you so much for being with us here. Let's start with that infrastructure package that Speaker Pelosi says she's going to go forward with a vote on. Is there any chance she'll go forward if she's not confident she has the votes to prevail?
David, it's good to be with you. I think you're seeing some of this happening in real time. Speaker Pelosi just met with her more moderate members. There's some of them that are already now speaking to the press, saying that they are moving forward with this vote. She had that press conference. She played shots from that press conference where she said this is the fun part about lawmaking. And she's speaking not just in terms of the BIF, the bipartisan infrastructure package, but also in terms of her legacy with regards to the reconciliation package, saying that this will get done. But she's also, to some degree, hedging her bets, saying that this is not necessarily has to happen today. So you might see some more activity now with Manchin coming forward with his somewhat secret agreement with Leader Schumer. This action might take place in the next couple of weeks.
Well, let's go back over that. So, as you call it, secret agreement. It just was reported, I think, by Politico today that there's a memorandum that was initialed, I guess, by Majority Leader Schumer from Joe Manchin way back in July 28, basically coming up with a $1.5 trillion numbers. But we're only hearing about it now. Obviously, this is a leak from somewhere, Kevin. What does that tell us about where the negotiations are?
It means that it's somewhat stalled and that things are happening in rapid formation. Obviously, that agreement talks about mean testing for some of these benefits. As you rightly point out, David, it has a $1.5 trillion ceiling, not ground, in terms of what Manchin is seeking for in this reconciliation package. He had a pretty intense press release yesterday talking about out-of-control spending in Washington. And as you know well, 50-50 Senate, we need every single Democrat to be on board. So Democrats can be only as progressive as the good senator from West Virginia on this.
Yeah, I think what he said was it's fiscal insanity to go forward with this at this point.
Exactly right.
Pretty strong words from the Democrat from West Virginia. But do we have any sense of what he really wants? Is it $1.5 trillion? Because there were some people talking today said that maybe he really wants zero. That is on the reconciliation part, the overall budget, not the bipartisan infrastructure.
Yeah, it's a good question. And you've seen the administration kind of pivot to talking about, especially not just Senator Manchin, but Senator Sinema of Arizona, what do you want to see as part of this rather than what is the price tag involved? So let's talk through the issues. Let's talk through the programs. Let's talk through what's critical to be part of this bill and less about the actual price tag in that. So I think you're going to see Democrats moving in that direction. What are the things that are unacceptable to progressives to take out without a real focus, hopefully, on the bottom line?
So, Kevin, one of the things that we just heard about at some length in the hearings just concluded 2 hours, 15 minutes worth at the House Financial Service Committee with Secretary Yellen and Chair Powell was about the debt ceiling, which is looming out there. Secretary Yellen has said October 18 is the date we'll literally be unable to pay our bills. At the same time, isn't it clear where this is going to come out? It's just a question of how long it takes and how much damage we do in the meantime?
Well, I sure hope so. You know, she had a really compelling piece in the Wall Street Journal about this, saying that the debt ceiling, and she talked about this on the Hill today before the House Financial Service Committee, has been suspended or increased over 80 times. In the history of this country. It's never been an issue between Democrats and Republicans or Democrat and Republican administrations. And she talked at great length in that hearing today, David, as you mentioned, about the repercussions of whether we default on our loans and just the catastrophe that will engulf the economy if we don't do this. This was never a partisan ploy. It's been used in recent memory, as you know, David, to enact policy changes. We've seen it with Ted Cruz. We've seen it with other conservative members to try and exact a cause or some kind of compromise coming out of this. But we certainly, as the Secretary, former chairwoman spoke today, cannot default on our loans.
But Kevin, let me put you on the spot. As somebody who spent a fair amount of time working on the Democratic side of the aisle here, what do you say to the point that was made by Patrick McHenry, among others, the ranking member today, that said, fine, let's not default. You Democrats have the votes. You've done a fair number of things without us. You can do this without us, too. Isn't he right? You do have the keys to your own jail?
Well, certainly. And, it's an interesting point from the Republicans. I'll note that, the federal government, for example, closed down 3 times under universal Republican rule during the Trump administration. So it's always better when government, especially something like this, operates in a bipartisan fashion. So again, the debt of this country should never be in question. It should be a bipartisan issue. And just because one party is in full control, albeit a really small majority, obviously in the Congress, then it shouldn't be just left up to one party to bring in the financial reins of this country.
Kevin, always great to have you with us, and particularly today. Thank you so much, Democratic strategist Kevin Walling.
David, good to be with you.
Coming up, we hear from the former head of the Congressional Budget Office, Douglas Holtz-Eakin, on the numbers being thrown around up on Capitol Hill. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Senator Joe Manchin, Democrat of West Virginia, just held a scrum up on Capitol Hill. Bloomberg's Joe Matthew was in that scrum, and he actually got to shout out a question. And now Joe is here to tell us what he heard, because I don't know. Joe, I understand you have the number, the magic number we've been waiting for?
This is a big headline, David. $1.5 trillion. Some people may have said they saw this coming. Some people thought that's where Joe Manchin's head was, but he hasn't actually said it out loud. And that was one heck of a scrum. This is the moment that all the reporters covering Capitol Hill have been waiting for, David. There were protesters waiting outside for Joe Manchin as well. They were all yelling, Joe, we had a deal. And indeed, $1.5 trillion, he said when asked, that has always been his position, and he has not changed his opinion on that. That includes now. Of course, the implications of that, that's less than half of what progressives were looking for in the reconciliation bill. And we don't know today, David, still, if the infrastructure bill is going to get a vote. So this is feeling very tenuous at the moment on Capitol Hill.
Yeah, it's less than half of what they're asking for at the same time. It's better than zero, which some people were worried about is what Mr. Manchin really wanted as a practical matter. So the question really is how the progressives are going to react to this. And by the way, is Nancy Pelosi about to, forgive the expression, roll the progressives no matter what? Because she seems to be really intent on getting a vote today on that bipartisan infrastructure bill.
That's absolutely right. I was actually with Speaker Pelosi right before I saw Joe Manchin for her briefing today. She did say that they were moving forward with that vote. She said she's thinking positively. It was the last thing she said as she left the podium, indicating that this could take all day. They're whipping votes all day. And this number that we just got from Joe Manchin is going to go a long way to forcing progressives and moderates to make a decision on whether they want to come together for the BIF, the bipartisan infrastructure bill. One thing that we do seem to all agree on here is if that happens, David, it's going to be a late night tonight in Washington.
That's Joe Matthew, our reporter, our intrepid reporter up on Capitol Hill in that scrum with Mr. Manchin from West Virginia. And you want to catch Sounddown, which is on every single afternoon at 5 p.m. on Bloomberg Radio that Joe is the host of. Republicans and Democrats have been spending a lot of time blaming one another for the debt and the deficit, even as the government reaches the debt ceiling limit and they prepare to spend more on infrastructure and other projects. To help us sort through all those numbers, we welcome Douglas Holtz-Eakin. He's president of the American Action Forum and former head of the Congressional Budget Office. So, Doug, thanks so much for being back with us. Before we get to the debt, which I definitely want to talk about, do you have a reaction to the $1.5 trillion number? Is it a surprise? Does it make sense to you?
It's not a big surprise. We always knew that it was going to be something lower than 3.5 and substantially lower. I guess one of the questions I'd have is that 1.5 in total spending to be offset by 1.5 in total taxes? Because he has mentioned in the past this should be paid for. So that would really dramatically change the shape of what has been proposed. And there are really two routes to get to 1.5. You could make some tough decisions about what's in and what's out. So, Medicaid expansion in, Medicare new benefits out, or you could cut everything down to a fewer number of years and less generous in the way of money. And so how they get to 1.5 is just as interesting as the number.
Yeah, so we did hear an awful lot about the debt and the deficit on the hearings that were going also up on Capitol Hill involving Secretary Yellen as well as Chair Powell. One of the questions that Secretary Yellen was really pressed on is what becomes unsustainable in terms of our debt? And she essentially said, I'm not going to give you a number in terms of dollars. I'm not going to give you a percentage of GDP. It depends on the debt service and how low the interest rate is. What's your reaction to that as the former head of the CBO?
This has become a sort of parlor game with your favorite debt sustainability metric. But whether you look at debt relative to GDP, the nominal interest cost relative to GDP, the real interest cost relative to real GDP, the sad reality is all of them turn north at some point and head straight north in the long run. So by whatever metric, we are on an unsustainable trajectory. And so making that worse is not a good idea. What is on the table in the House would make it worse. There's no question about that. They raised $2 trillion in taxes, but they only stop having long-run deficits by sunsetting the programs. If you put it on an apples-to-apples comparison, this is a big increase in the structural deficit and not a wise move at this point in time. And they're trying to avoid having that honest discussion with the Congress.
Okay, so Doug, let me put that back together with what we were talking about, the $1.5 trillion now we've heard out of Joe Manchin. If it is $1.5 trillion and they have like $2 trillion in new taxes, does that make you feel better about the deficit?
Yes, because then you've got something that looks like you're really matching the new program with the financing for new programs. That's certainly way better than what we've seen come out of the House committees. It doesn't solve all the problems, though. Remember, we have an existing structural deficit. We had an unsustainable trajectory before we got into the pandemic and these new programs. So what becomes of Social Security? What becomes of Medicare? What becomes of the existing Medicaid? All of which have big financial problems. No one's really talking about that.
Well, in fairness to Joe Manchin, he actually has referred to it. Part of the reason why he said yesterday that going ahead with the plan as it was being talked about was fiscal insanity. He said, we're not paying for Social Security. We're not paying for Medicare. We're already running deficits. So it sounds like he at least is raising that issue.
I think that's wonderful to hear. On both sides of the aisle, there's been a complete conspiracy to turn a blind eye toward the outlook on the federal fiscal front. And that's simply unfair to the beneficiaries that rely on those programs. It's unfair to future taxpayers who are going to get hit with sharp increases with no warning unless some real reforms get done and get done soon. So I'm happy to hear somebody raise that from any party on either side of the Capitol.
Doug, I also want to come back to the debt ceiling because that got a lot of discussion at the hearings today as well. We hear from Secretary Yellen it's going to be something like October 18 when we actually start defaulting on the debt, which the United States has never done in its history. How close can we get to that date before it starts really doing some damage in things like the credit rating in the United States government?
Well, we've tiptoed up toward that date in the past, and what you usually see is some fairly severe financial market jitters. You see people not wanting to be holding treasuries should that horrible moment come, and so rates start to bump up in advance of even a default. You have some liquidity problems because treasuries are the liquidity that make international financial markets go, and so you don't want to come too close to that date. We've already seen that. As for the credit rating, we're AAA, but the Standard & Poor's has put the U.S. on a negative watch. They are looking for evidence that the U.S. cannot effectively govern its finances, and this would be piece of that evidence, and that would risk downgrade yet again.
At the same time, the Democrats do have it within their power to put this all to bed, right?
Yeah, they do. This is raw politics. Neither side has the moral high ground. Democrats do have the ability to do something that is necessary and wise. And Republicans are arguing they're using that reconciliation ability to do something unnecessary and unwise. At the same time, Republicans did contribute to the bill that has to be paid by raising the debt ceiling. So no one has the moral high ground here. They're just trying to jockey for political advantage.
Okay, thank you so much. Always great to have you with us, and particularly today. That's Douglas Holtz-Eakin. He's American Action Forum president. Well, we received word today that electric truck maker Lordstown is close to a deal to sell its Ohio factory to Foxconn, making it our stock of the hour. And stocks editor Dave Wilson is here to tell us about it. This is the factory that GM actually sold to Lordstown.
Absolutely. And you may remember that former President Donald Trump weighed in as that process was going on. I mean, Lordstown is a factory, been around since 1966. And yes, it's been less than 2 years since Lordstown Motors, this electric truck developer, took over the plant. Well, they've had a bit of a turn in their fortune over that time. The money just isn't there the way it used to be. And now they're looking, according to people familiar with the matter, at selling to Foxconn. Now, if that name is familiar at all, it's because they make Apple's iPhones, among other electronics. And they've been moving into electric vehicles. They have a deal with another U.S. developer of EVs, Fisker, already. So, working with Lordstown, not a surprise in that sense. And in terms of the cash, I mean, it's down 42% in the first half of the year at Lordstown. They need money. Automaking is a pretty capital-intensive business, and if you don't have the money, well, it becomes a real challenge. And this company hasn't even brought out its first vehicle yet, unlike some of its peers. And you look at the shares, it's been about a year since Lordstown went public through a blank check company. I mean, there was some initial enthusiasm, clearly from the stock price chart, that's really faded as the financial issues have become front and center. And also, Lordstown has been investigated for some of its disclosures by U.S. regulators. And you put that all together, I mean, it's clear that in EVs, that's an area where people want to invest in. Alex Partners, 41% increase this year on projected investment through 2025.
Yeah. In the meantime, the question is jobs out in Lordstown. I'm not sure how many are out there at the moment. Thank you so much to Dave Wilson, our stocks editor. Coming up here, Bloomberg Big Take on the biggest risks that we face with Kathy Wood of ARK Invest. And this is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. What is the next big risk that keeps the top names on Wall Street awake at night? ARK Invest CEO and CIO Kathy Wood told Sonali Basak that while many investors are worried about inflation, she's more concerned about the opposite problem, lack of growth.
Jeff Gundlach and Howard Marks, and I think Stan Druckenmiller and Ray Dalio, all of them, I think, have been very, very concerned about a deflationary bust. And we agree with them in this respect. We think it's going to be balanced by a deflationary boom. So that's where we differ. But where we agree is that there are companies who thought the world would never change and have been, again, catering to short-term shareholders who wanted that extra penny or two in earnings, and so got it by having the companies leverage up and take more debt and shrink the number of shares. And they've also been focused on dividends. They are probably saddled with products and services that will become obsolete because of the record-breaking amount of innovation taking place today. And in order to service their debt, they are going to have to cut prices and move those goods and services that are on their way out anyway. So I am concerned about that. And I think there's going to be a lot of confusion around it as well. So that's why we keep our eye on the innovation ball, because that is going to balance these issues out to a great extent. But what it will also mean is that the traditional GDP numbers we're going to be seeing are going to be very low. And so, and growth will seem very scarce. I think it will proliferate over time, and that some of the companies that we own, the stocks we own, they're not in any index out there. So a lot of public market investors aren't exposed to them, but we think there are going to be a lot more of those opportunities going forward.
That is ARK Invest CEO Cathie Wood speaking with Bloomberg's Sonali Basak. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to former HP CEO Carly Fiorina. This is Balance of Power on Bloomberg Television and on radio.